Ken Leon, research director over at CFRA Research, joins us now. That feels very binary for some of these big banks, Ken.
Oh, it does. It's great to be with you. And of course, we've seen rotation in the market today, and financials have been benefiting really for the last few weeks, and they're going lockstep with the S&P 500. I think bank analysts are always toggling between the large global banks and regional banks, and we're seeing good performance from both. But I think overall, when you look out to the next 6 to 12 months, and we'll talk about the election, we certainly favor those banks with a higher weighting to the capital markets and investment banking. And that would be Morgan Stanley and Goldman Sachs. JP Morgan will take along the ride as buys. We see more challenges and perhaps a bit of a slowdown in rate compression in the Bank of America or really even Wells Fargo, and we saw that in the recent results. So those are the fundamentals. I would think I disagree with Bloomberg's conclusion. Basel III endgame is going nowhere. Congress wants this walked back. Jay Powell at the Basel III had a reference to it, but at the end of the day, we're not going to see the risk of 15 to 20% capital build that was the hysteria with Basel III. So I think it's a long way off. We think some implementation may be next year, but we're going to take that risk off the table. So we disagree.
Okay, so basically the capital rules, they're going to happen. Don't get too excited about that. But what about the deregulation part of a potential President Trump White House in terms of now is M&A in the space going to become a little easier, particularly among the regionals?
So I also cover the alts industry. Blackstone reports tomorrow, KKR, the top 8. And what we've seen so far, we're kind of from the trough of investment banking, underwriting, and M&A. We're in about the second inning. So we saw good results, high percentage year-over-year gains for all the banks. But then looking ahead, this is important. The financial sponsors, which are the alt industry, have about over $1 trillion of equity investments that have to be monetized. It's very hard for them on new flagship funds to get new money from limited partners if they can't go through this 7-year cycle of selling out these investments. So that's going to be huge momentum, obviously, for them, but it's going to benefit certainly Goldman, Morgan Stanley, and other large banks.
Are those large banks, though, are they still taking on that risk, Ken? Or they're willing to, I should say?
You're referring to what specific risks?
With regards to the private capital deals and the idea of their involvement in that.
Well, they're doing it in two ways, and they have great relationships. First, they play the role as an intermediary or agent to execute those, unless they're going to backstop, any equity IPO, with their balance sheet, but probably less likely. Additionally, if you're listening to David Solomon of Goldman Sachs, they are becoming private equity-like, but not using their balance sheet. So it's very interesting to see that when we look at where are the opportunities, whether it's private credit, in this case, private equity, which helps M&A and equity underwriting for the next 12 months, a lot of good opportunities. But unfortunately, not all banks will benefit from this, and that's why it's our call to pay attention to the capital markets.
I am curious just about the general structure of the traditional banking industry. Coming out of that regional banking crisis last year, there was a lot of talk about consolidation, not just amongst the tiny banks, but even among some of those super regionals. I think that kind of died down, that conversation died down a little bit. But when you talk to executives, they still say that's still in play. Are you seeing that?
We watch it. We watch it closely. And, from our perspective, given that there's additional rules if you're over 100 billion, so it's a delicate dance for executives. There's over 4,000 banks. There's a lot of Congress persons who like having those small banks. They play an important role in the U.S. economy. And certainly if there's M&A, with regional banks, it's interesting. But I think for institutional investors, if you're making allocations in the financial sector and it happens to be part of it banks, you're going to be focusing on the U.S. global banks mostly.